Thank you for watching. My name is Ashley Micciche, CEO of True North. I'm here with David Wilson, our founder and president, and today we are talking about the economic and market update for the month of October. I can't believe we're already in October. 2019 is almost gone. And so today we're going to talk about what's driving the markets, what's driving the economy, and as a result, what's driving your portfolio, because that's all that matters, right? Is we want to know what's going on in the world, take all of the garbage and everything in the news and everything and distill that into what matters most. And so that's the purpose of this video today, is to help you make sense of what's going on in the world, and let you know what we're doing about it when it comes to your investment portfolio, when it comes to planning for your retirement, etc. This in early October, and the market's been rocked the last few days by some negative news about manufacturing and some other things that are basically driving the stock market at this point. So what's going on there?
Well, we had some economic numbers come out just in the last day or two. Manufacturing numbers were weak, the weakest they've been in 10 years. The service sector this morning was also showing some weakness, so that kind of spooked the market. And the Dow's down 1,000 points the first week in October, so that's welcome to October. But what's really going on is we've got a slowing in China, and that's their economy's been slowing for a while, and because of the tariffs, that's impacted other countries like Germany. That's a big part of Europe. They've had a slowdown because obviously China's not buying as much of their goods. And again, that's kind of come over to our shores, where our economy is slowing down. It's not in recession or anything, but it's slowing down. Still strong compared to the rest of the world, but it is slowing down. And so that's what has the market a little spooked at this moment.
Now you touched on China, but there's also that other layer of the trade war with China, and that's been a huge driver of the stock market this year. So why don't you talk about what you think is likely to happen and how that's going to influence the stock market?
So the way I look at it is the Chinese, they know in either 1 year or 5 years, Trump's going to be out of office. So, if I was China, I would say, hey, why would I sign anything? Just let's wait him out. We can suffer for 4 or 5 years. We've been a communism for 70 years, right? I think if I was Trump, what I would go for is an interim deal, where I would either cut the tariffs to nothing or a very low amount. In return, they open up their markets a little bit, which I don't think is a big deal. And they agree to buy a bunch of our agricultural goods. But I think a deal has to be cut. Otherwise, you don't want to risk the economy getting weaker. So I actually think these talks that are coming up, that they will agree to something. Something like
something that could help the economy and help Trump's reelection.
Exactly. I think that's what. Yeah.
So let's talk about the Fed, because the other big driver of the economy and the stock market this year has been the Fed. So
the Fed has been behind the curve. They raised quickly 4 times in 18 in anticipation, with the tax cuts and everything. But then they didn't see what was really going on here and abroad, that things were slowing down, the world economy was slowing down, and they were very slow to start cutting. So they finally cut at the end of June, and then they cut one more time, but they're still behind the 8 ball. They should cut another 2 times this year. In fact, in the third quarter, we had 16 central banks around the world that cut their interest rates. In the fourth quarter, we expect 2 dozen countries to cut their rates. So everybody else is, there's a race to zero, and our Fed is fighting it when they need to get on board just to make sure there's a cushion that there isn't a recession. Because again, once you start getting this ball rolling, people say, well, wait, maybe I'll cut back. If their business is slow, maybe I won't make that car purchase. And it doesn't take much to get the business cycle to turn down. and there you have a recession.
Why, when the Fed lowers interest rates, why is that such a big driver for the stock market and the economy?
Because typically, historically, when the Fed is in an easing cycle, it's been good for stocks, because what it does is it reduces the cost of capital for companies that are borrowing, for
even for mortgages, car loans, everything, it makes things cheaper, and it kind of incentivizes people to continue to spend, which then drives the economy, which then drives the stock market. So I just wanted to make that clear, because I think you hear about this all the time in the news, and you don't realize what the connection is between what the Fed is doing and how that impacts your portfolio. Obviously, it impacts, if you own a lot of bonds, interest rates on bonds as the yields drop on those, but the prices go up too. So it has a lot of ripple effects across a lot of different areas, bonds, stocks, etc. But it is very influential to your portfolio based on what the Fed is doing with interest rates. Okay, so we've talked about China, the Fed, both big drivers. There's somewhat negative economic news that's recently come out, but there's also a lot of reasons to be positive. There's a lot of the leading indicators are still pointing to continued growth. You look at consumer sentiment, you look at housing, profitability in S&P 500 companies is slowing down, but it's still positive. So there are a lot of reasons to be positive, I think. What are your thoughts on where the economy goes from here, where the stock market and hence client portfolios go from here?
So I think the main theme that we've had for about the last quarter, what we've been trying to do as the market approaches new all-time highs, we've been using that to look at everybody's asset allocation to see where it is. And we've been basically taking some chips off the table just because we've had such a great year. I mean, this is the best first 9 months of the year in 2 decades.
Oh,
so
I didn't know that.
this is, I mean, that's why. So when things are good and everybody's happy, that's when you want to take some chips off. So the thing is, now that we've pulled back a couple percent, I'm not as aggressively taking money off the table, but basically we're looking at everybody's asset allocation, saying, hey, maybe that should come back a little bit, because again, over the last few years, it's been going up and up, and the allocation between stocks and bond has been, wider and wider. And over the next year, while we think we're going to grow, I mean, it's going to be probably, maybe 2% or something on that order.
The economy. I don't know that I don't think you can assume that we're going to have another double-digit growth year. So I think it's going to be in the single digit, maybe low single digits, because it's an election year. So each side of the party is going to be pounding the drums, saying either how bad things are, how good things are, and it's an election year. So I'm not expecting a whole lot for next year, actually. What are your thoughts? So you think slow growth, but at only 2%, it wouldn't take much to push us into a recession next year.
Well, I wouldn't say push. The thing is, again, it's about the Fed. If they get their act together, we'll be just fine.
So there you have it. We've been actively reducing stocks in client portfolios where it makes sense to take advantage of the phenomenal and unexpected. I did not think that I'd be reviewing client portfolios and pretty much everyone is like up double digits for the year. If you like this video, please like, comment below. If you have a question especially, we'll be there to answer it. And then subscribe to our channel where we put out new videos on retirement and exit planning every single week. So thank you so much for watching. Thank you, Dad.
Yeah, thank you. And if they voted me on the Federal Reserve, I'd fix things right away.
Oh, would you? Yeah.
Yeah.